So, you're moving to Warrensburg, Missouri, or you're PCSing to Whiteman Air Force Base, and you wonder if you can use a VA loan. What is a VA loan? Can you use a VA loan? Let's talk about that. Eva here with Nextdoor Agent. Thank you for watching my videos. Make sure that you click on the button down below to like and subscribe because I put a new one out every single week all about eating, breathing, sleeping, playing, drinking in Warrensburg, Missouri, near Whiteman Air Force Base, and you're gonna wanna get notified. Also, if you're moving here, if you're PCSing here, my contact number is down below. Feel free to text, call, email. Actually, I just spoke to someone who is PCSing to Whiteman in October, and they're coming all the way from Germany, and I'm helping them buy a house, and they have so many questions, and it's awesome. It makes my heart happy. So, if you're coming here, if you have a question, shoot me a text. I love talking to people. So today, we're gonna talk about VA loans. What is a VA loan, you ask me? Well, a VA loan allows eligible veterans or eligible active duty service members or eligible surviving spouses to finance a home with zero down payment, so no money down, and no mortgage insurance with lenient credit requirements. Now these loans typically have lower interest rates as well versus conventional loans. So what are the requirements of a VA loan? So one of the very first things is that you have to show your eligibility. So you have to give your lender something called a Certificate of Eligibility, or a COE. And what this basically is you can go online and get it, and it shows that you are eligible to get a VA loan. So what are some of the VA loan eligibility check marks, so to speak? Well, there's some minimum service requirements. You have to have 90 days of continuous active duty service. You have to have 90 consecutive days during wartime. You have to have 181 days during peacetime, or more than 6 years in the National Guard. So any one of those things will make you eligible to get a VA loan. So if you have 90 continuous days of active duty, you're eligible at that point. On your 91st day, you're eligible to get a VA loan. Another requirement of a VA loan is usually having a credit score of over 620. So the VA does not set a credit score limit that you have to be above or below, but most lenders do. And there's a lot of flexibility. The lender will actually, with a VA loan, they'll look at more than just your credit score, or they'll look at your debt income ratio, they'll look at your job, they'll look at tons of different things. So you have a lot more flexibility than just your credit score, which is different with a conventional loan. You usually have to have a very set, you have to have a 700, you have to have a 690, you have to have a 705, whatever it is. But with a VA loan, usually lenders say that you have to have a 620 or above. But they're very flexible, and they really try to work with as many service members and veterans and surviving spouses as they can to kind of find some gray area to really help people who have served in the military buy a home. So what are some myths about VA loans? And I actually found 5 of the most common misunderstood things about VA loans, and I'm gonna kind of just like shoot them down one by one to kind of give y'all watching some more information about the 5 common myths about VA loans. So, number 1, veterans can only use their VA loan one time. This is false. You can actually use it multiple times throughout your lifetime. There is no limit. What there is a VA funding fee. Now, the VA has a funding fee. So every time you use your VA loan, most people will have to pay a certain percentage of the total amount that they're receiving. And this is basically in order to keep VA loans going. But the first time you use your VA loan, it's going to cost you 2.3%. That's your first use. And then every subsequent use is going to cost you 3.6%. If you put 5% down and use a VA loan, that funding fee actually drops. The first time you use it, it's 1.65%, and then it's 1.65% for your every single time you use it after that. So If you use a VA loan, you will probably have to pay a funding fee, which is a percentage of your entire loan. So the only exception to this rule is that you do not have to pay the funding fee if you have a disability that you gained from your service. So at that point, you would definitely want to look into not having to pay that fee. There you go. Myth number 2, you can only use or have one VA loan at a time. That's not true. So say you use your VA loan to buy a home. You live in it for 2 years, you're super happy with it, but you're ready for something bigger. You can then rent that home out and then use the rest of your benefit on your VA loan to buy a second home. So usually there's a limit for every state. In Missouri, I think it's right around $628,000 right now. So if you buy a home for $200,000, you live in it for 2 years, you're still paying on that house, you can then rent it out and use your VA loan a second time for the rest of that chunk that you have left and buy a second home and live in that one. You do have to live and occupy the property for a set amount of time though before you can then rent it out and move to your next one. But you can have multiple VA loans at the same time. Myth number 3, that VA loans are only for single family houses. False. You can actually use your VA loan to purchase a duplex or a quadplex as long as you live in one of the units. But you can, as an airman, buy a duplex, live in one side, rent out the other, and you're basically living for free. It's called house hacking. And it's such a smart idea to start yourself off get really good financial awareness and start off on a good foot. But you can use your VA loan to buy a duplex or a quadplex. You can also use it to refinance up to 100% of your house. So you can use it to buy single family, you can use it to buy multifamily as long as you're living in one of the units, and you can also use it to refinance your house. There you go. Myth number 4 is that VA loans are only for small, teeny tiny starter houses. Not true. You can actually use your VA loan up to, I think right now it's in the mid 600,000, so it's like 620, 630, 640. It does fluctuate, but you can buy a home all the way up to $600,000 with your VA loan. So that's a giant magical home, and if you can afford the mortgage payment, go for it. Myth number 5 is that VA loans take so long to close. Not true. You just need to find a lender who is used to working with VA loans, and they don't take any longer than a conventional loan. I close them all the time, and I have 0 problems in closing VA loans. Actually, easy, fast, quick in a 30-day period. So make sure you have a really good realtor who knows and is comfortable with all the different loopholes and knows what to expect from a VA loan. And then also make sure that you have a lender who is very well versed in them, and your process will go super smoothly. Now, what are some disadvantages of a VA loan? Well, for starters, number 1, you don't go into buying your property with any equity in it. So you're basically getting a loan for the entire value of the property, and you don't have any equity. So if you don't put any money down, you just walk into something 100% financed. Now, the VA is funded and backed by the government, and if you stay in that house for a good set amount of time and maybe do some upgrades or just treat it nicely, treat it like a lover, be nice to it. I can't believe I said that. Anyway, if you take care of your property, especially in Warrensburg, house prices just keep going up. So you're gonna eventually have equity by paying down the mortgage and then just sitting in it long enough where the value goes up of your property, and then you will gain equity. But it's a little different from when on a conventional loan, you put 20% down, so you instantly have that big chunk of equity in your property. Number 2, such a disadvantage, such a bummer. You cannot use a VA loan to buy a vacation home or like an Airbnb home. Unfortunately, one of the big things about a VA loan is that you have to occupy the property within 60 days. So you can't just go buy a house in Tahoe or Aspen or Vail and use it as an Airbnb unless you use a conventional loan, unless you live in it, because with a VA loan, you can't buy vacation homes. I know, it's sad, but true. So a third disadvantage are the VA appraisals. So there are minimum property requirements. And this is basically because your loan is backed by the government. They want to make sure the house is safe, it's secure. For example, there are some things that definitely flag VA appraisals, and those are if you have an electric panel that's outdated or has been recalled, if there's holes in the vinyl siding, if there's holes in the roof, if there's exposed rotting wood on the fascia, the eaves around the house. Those are things that will flag an appraisal on a VA loan, and those things will have to be fixed either by the seller or by the buyer before the house can close or before the property can close. So it can be a deterrent for some sellers who just don't want to deal if they know that a property will not pass a VA appraisal. They just don't want to deal with it. So one thing that I make sure of, especially if I have veterans or active duty members who are looking to buy a property, especially a fixer-upper, I have to tell them, look, if you're gonna use your VA loan, there are certain things on a property that will just not fly and it won't pass VA appraisals. So sometimes you can't even show a client a property because you know it just won't fly with a VA loan. So there's really no point in wasting their time. And the last but not least disadvantage is the funding fee. And like I said, every time you use your VA loan, there's a funding fee, and that's a certain percentage of your total loan. And the amount of that funding fee changes depending upon if you put any money down, if you have a disability that you gained in your service, or how many times you've used your VA loan. It usually starts out at 2.3%, and then every single time you use your VA loan, again, it's 3.6%, and that's of the total loan amount. If you put down 5%, it's only 1.65% that you have to pay for a funding fee. But for the most part, most everyone will have to pay a VA loan funding fee. So you don't have to put any money down, but you're adding this amount to your loan for your funding fee. So make sure that you're aware of that, so you know going into your property, you have this loan amount and then you're having this additional amount added to it. So you're not like looking at your mortgage like, oh my God, what is this? What is going on? Anyway, there you go. So, in summation, VA loans are magical, wonderful things that can really help families of military members who are active or retired or surviving spouses buy a property without having to put a bunch of money down, and it really helps them get a financial footing in life, which, you know, everyone who can get a VA loan, thank you for your service. Super duper appreciate it. Love you guys. Hope you liked my video. Make sure that you like and subscribe down below, because I make a new one every single week, all about living in Warrensburg or living near Whiteman, Missouri. And it just kind of gives you knowledge, especially for people who are just PCSing here sight unseen. I'd like to try to give a feel of what Warrensburg is like and what it's like to live here, so you're not just like jumping into the stew pot, so to speak. Also, my number is down below. If you have any questions, if you have any concerns, if you just want to know what our Walmart is like, it's pretty big actually, it's not too terrible. Give me a call, shoot me a text. I love talking to you. Have a good one. Till next time.